Wall Street called it the most innovative company in America, 6 years in a row. But in truth, it was the biggest lie corporate America had ever told. Enron dazzled Wall Street with promises of endless growth, only to collapse in a storm of lies and greed. Behind the shiny skyscrapers and glowing magazine covers, a darker truth was waiting to explode. Ready to step into the scandal that shook the world and forever changed corporate America? A house of cards. Imagine a company everyone believes is unstoppable. Reporters worship it, investors pour billions into it, and employees think they're working for the future. Now imagine all of that built on sand. That was Enron. In the late 1990s, the Houston-based energy company was the darling of Wall Street. Its value shot past $60 billion, and its stock price climbed to heights that seemed untouchable. Fortune magazine crowned it America's most innovative company year after year. To outsiders, it looked like Enron had cracked the code of endless wealth. But behind the curtain, things were not what they seemed. Whispers about shady accounting and secretive deals began to circulate. Some people dared to ask, was Enron really the titan it claimed to be? Or was it a ticking time bomb, one gust of wind away from collapse? To understand how this empire rose and fell so spectacularly, we need to go back to the beginning. The meteoric rise. How does a sleepy gas pipeline company transform into a Wall Street superstar in just a few years? Enron's rise looked like a modern-day miracle. The story began in 1985 when Houston Natural Gas merged with InterNorth, creating Enron. At first, it was just another utility business, boring, predictable, steady. But under CEO Kenneth Lay, and later the ambitious Jeffrey Skilling, Enron reinvented itself. Instead of just selling gas, Enron pioneered something radical: energy trading. It treated electricity and natural gas like stocks, commodities you could buy, sell, and speculate on. Suddenly, energy wasn't just power, it was profit. Wall Street went wild. By the late 1990s, Enron was more than a utility. It was an empire. It expanded into broadband, weather derivatives, and even global projects. Its headquarters in Houston shimmered as a glass monument to ambition. The rewards were massive. Enron's stock soared, peaking at $90.75 in August 2000. But here is the thing, almost none of this money was real. Employees were millionaires on paper, thanks to stock options. Executives strutted through Houston like rock stars, and Fortune magazine couldn't get enough, naming Enron the most innovative company in America 6 years in a row. But here is the thing, almost none of this money was real. But innovation alone wasn't fueling this rocket ship. Behind the glossy headlines and skyrocketing stock price, something rotten was festering. Tricks, lies, and secrets. What if the profits you admire are nothing more than smoke and mirrors? Enron's true genius wasn't in energy, it was in hiding debt and faking profits. Led by Chief Financial Officer Andrew Fastow, the company built a financial maze filled with tricks, loopholes, and secret entities. At the heart of this scheme were special purpose entities, SPES. These were shell companies with strange names like Raptor and Chuco. Their purpose? To park Enron's massive debts and losses off the balance sheet. On paper, Enron looked strong. In reality, it was drowning. Here's the scam. When Enron lost money, it moved the debt into these SPES. That way, Wall Street saw only glowing profits, not the bleeding wounds underneath. In 2000 alone, Enron boasted nearly $1 billion in profit. But most of it was fake, crafted through accounting tricks and hidden behind Fastow's complex web of subsidiaries. Even worse, the watchdogs were asleep or bought off. Arthur Andersen, one of the big 5 accounting firms, signed off on everything. Why? Because Enron was paying them huge fees, $52 million in 2000 alone. Instead of protecting investors, Andersen became Enron's partner in deception. Meanwhile, executives like Lay and Skilling cashed out at record speed. Between 1999 and 2001, they sold more than $1.1 billion in Enron stock. At the very same time, they urged employees to keep buying and told the public everything was fine. The lie was brilliant, but lies always leave cracks. And soon, cracks began to show. Journalist Bethany McLean at Fortune asked a simple question in 2001. How exactly does Enron make its money? The Great Collapse. When does a secret grow too big to contain? For Enron, that moment came in 2001. In August, CEO Jeffrey Skilling suddenly resigned after only 6 months in the top job. He claimed personal reasons, but the market smelled trouble. Enron's stock, already shaky, dipped further. By October, the facade crumbled. Enron reported a $618 million loss and revealed that shareholder equity had dropped by $1.2 billion. The once mighty giant was bleeding in plain sight. The Securities and Exchange Commission, SEC, launched an investigation. They uncovered Enron's twisted SPES, billions in hidden debt, and profits built on fiction. In November, Enron admitted it had overstated earnings by $586 million since 1997. Investors rushed for the exits. The stock price collapsed from over $90 to less than $1. On December 2, 2001, Enron filed for bankruptcy, the largest in U.S. history at the time, with $63.4 billion in assets wiped out overnight. In less than 24 months, Enron went from Fortune's favorite to America's biggest fraud. A fall so fast, it stunned the entire world. The damage was catastrophic. Employees lost jobs and retirement savings. Enron's 401k plan, tied heavily to company stock, was wiped out. Thousands of families who had trusted the company with their futures were left with nothing. Investors, big pension funds, and small shareholders alike lost $74 billion. Arthur Andersen, Enron's auditor and accomplice, was destroyed too. The firm collapsed, taking 85,000 jobs worldwide with it. In just months, a company hailed as the future became the cautionary tale of the century. In conclusion, don't be fooled again. Could another Enron happen today? The answer depends on us. The Enron scandal reminds us never to take success at face value. Big promises and shiny profits may hide dangerous truths. As investors, employees, or simply citizens who rely on corporations, we must ask the hard questions. Dig deeper, demand transparency, and remember, no company is too big to fail. Want to dive deeper? Read The Smartest Guys in the Room by Bethany McLean and Peter Elkind, or watch the documentary of the same name. These accounts reveal the human drama behind the numbers, the arrogance, the ambition, and the greed. Enron's story proves one thing: greed doesn't just destroy companies, it destroys lives. And the next wealth file is even wilder. Subscribe because you don't want to miss it. See you in the next one.